Tesla reported their earnings on Wednesday. As you guys know, we record on Thursdays. You listen on Fridays. Record revenues, 28 billion, up 12% year over year. Massive amounts of free cash flow, 4 billion. I think they're up to 40 billion in cash, which is always great when you're going into some big capital intensive projects like Optimus and like self-driving. Downside, operating profit fell 40%. Stock dropped a bit, 4%, but bounced back. And on the earnings call, Elon emphasized the importance of his $1 trillion pay package, which will give him just but 12% additional stake over the next 10 years if he hits absurd targets. That would make everybody who holds the shares in the company extremely wealthy, and they would benefit more than Elon himself. And here's his quote: "My fundamental concern with how much voting control I have at Tesla is if I build this enormous robot army, can I just be ousted in the future? I don't feel comfortable building that robot army if I don't have at least influence over it." And he called Glass Lewis and ISS corporate terrorists. These are the people who vote on behalf of passive index funds for things like who's on the board of Tesla. A vote for Elon's pay package will be November 6. Polymarket thinks it's going to pass, as we talked about before. They tend to get it right 85% of the time in this time frame, actually. So 79% chance as of Thursday afternoon. I guess, Chamath, there's a couple of ways to go at this. There's the performance of the legacy business, there's the potential of the future business, and then there's governance, the company moving to Texas, and this pay package, and this transition period for Tesla, which is going from somebody who sells cars, really nice ones at a very nice margin, but a lot of competition now, and then this business that obviously Elon himself is obsessed with, which is the Optimus, as we saw when he was at the All In Summit. Take it wherever you want, Chamath.
I'll say three things. Stan Druckenmiller has this very useful comment about stocks, which is when you buy it today, you're trying to buy what that company is going to look like in 18 months from now. And what it's doing today doesn't matter. The thing about earnings and P&Ls and quarterly reporting is that it's looking backwards, and it's trying to give you a sense of what happened, not what will happen. So I think there are three critical things about what will happen that I think are important with respect to Tesla. The first is at the foundational technology layer. And Nick, I sent you this tweet, but it's what he said about AI5. I've made these comments before, but he had these multiple efforts with Dojo and other stuff that he merged into one unit. And the quote is pretty incredible. We're going to focus TSMC and Samsung on AI5. The chip design is an amazing design. I've spent almost every weekend the last few months with the chip design on AI5. By some metrics, it will be 40x better than AI4. We have a detailed understanding of the entire stack. With AI5, we deleted the legacy GPU. It basically is a GPU. We also deleted the image signal processor. This is a beautiful chip. I've poured so much life energy into this personally. It will be a real winner. Why is AI5 so important? What AI5 is the building block of a system that I think you'll start to see, not just in the cybercabs, but also in Optimus. So from a functional technology perspective, there's been a leap, and that leap is going to come into the market. That was the first thing he said, which I thought was really important. The second thing was what he said about his energy business, which I think is the critical adjunct to believe robotics and autonomous cars. If robotics and autonomous cars work, what you really need is an energy business beside it that is humming and on all cylinders. Why? It's how you make LFP battery cam that will be the limiter. Energy will be the limiter. But what he's showing, and Nick, I sent you this tweet, is that business is just on a tear. It's printing $3.5 billion a quarter, and its operating margins, an energy business, 30%. And so what you're going to see are battery packs of all shapes and sizes, the huge battery systems that's going to go into data centers, but then all the way down, I think, to the small LFP cam that he's going to need to power all these things. And then the third thing is his comments on Cybercab, which is that this thing is just going to be a shockwave. So I read all of those things and I was very bullish. I think that he is humming on all cylinders on the critical layers of the stack that he needs to build this next version of Tesla. My concern, I think there's a real concern that I have that this vote is going to go down to the wire. I think that ISS and Glass Lewis, I think that these organizations are pretty broken. I think the way that they make decisions are hard to justify. An example of this, they asked to vote down Ira Ehrenpreis as a director of Tesla because he didn't meet the gender components, but then they wouldn't vote in favor of Kathleen Wilson-Thompson, even though she does technically meet the gender requirements. So it's very confusing where ISS and Glass Lewis are coming from.
Cathie Wood has never been afraid to go against the crowd. When most of Wall Street panics during crashes, she does the opposite. She leans in. She believes something most investors can't emotionally handle, and today we're diving into exactly what Cathie Wood thinks about stock market crashes, why she believes they're necessary, and why she says the biggest opportunities in history are created when everyone else is terrified. Because while the average investor sees a crash as disaster, Cathie Wood sees it as a reset. She believes crashes don't just wipe out prices, they wipe out weak ideas, weak companies, weak innovation. And what's left standing is the future. Whenever markets crash, panic spreads faster than any news headline. Investors sell because other investors sell. It becomes emotional. It becomes irrational. Prices no longer represent the value of a company, they represent fear. And that's exactly where Cathie Wood steps in. She believes crashes expose the truth. The companies that were running only on hype get destroyed, and the companies that actually build real disruptive technology eventually rise stronger than before. Cathie says crashes are moments where the market finally stops pretending. All the noise disappears. Overvalued companies collapse. Speculation gets punished, and what survives are businesses actually changing the world. Artificial intelligence, robotics, genomics, electric vehicles, energy innovation. These aren't just buzzwords to her. She believes they are the foundation of the next financial revolution. And a crash doesn't stop that future. It accelerates it. But here's what makes her different from 99% of investors. Most people only look at what's happening right now. Prices falling, fear rising, headlines screaming doom. Cathie Wood looks years ahead. She says crashes are painful, but temporary. Innovation is powerful and permanent. According to her, the biggest mistake investors make during crashes is letting emotion replace logic. They forget that the companies truly leading innovation are still building, still creating, still advancing, even if their stock price is going down. She believes that history has proven this again and again. Every massive technological revolution went through brutal crashes. The dot-com crash destroyed thousands of internet companies, but the few real innovators survived. Amazon survived. Google survived. The internet didn't die, it changed the world. And Cathie Wood believes we are living through that same cycle again, just on a much bigger scale. During crashes, she doesn't ask, how low will it go? She asks, who will change the world after this is over? That mindset is why her investment style feels extreme to some people. While the world screams panic, she sees opportunity. When others sell everything, she doubles down on what she believes in most. But let's be honest, her strategy isn't easy. It comes with massive volatility, huge drawdowns, painful criticism. When markets fall, her funds fall even harder. People call her crazy, irresponsible, even delusional. But she doesn't back down, because to her, crashes are not the end. They are the cleanup phase before the next era of growth. Cathie Wood believes central banks, technology cycles, and economic fear all create temporary chaos. But innovation breaks through all of it. She believes artificial intelligence will reshape productivity. She believes robotics will transform industries. She believes DNA sequencing will change healthcare forever. She believes autonomous vehicles will rewrite transportation economics. And she believes investors who panic during crashes risk missing what she calls once-in-a-generation opportunities. To Kathy, the most dangerous thing in a crash is not losing money temporarily. It's losing conviction permanently. But here's the real question. Is she right? Or is she dangerously optimistic? That is what makes Kathy Wood so fascinating. She is either going to be remembered as one of the boldest visionaries of our time, or one of the most stubborn believers in a dream that never fully materialized. And that tension makes every crash feel like a test of patience, a test of belief, a test of whether innovation truly wins in the end. When markets crash, the crowd screams, "Get out!" Kathy Wood says, "Pay attention." Because crashes reveal who was pretending and who was actually building. So the next time the stock market crashes, remember this. To most people, it feels like the end. But to Kathy Wood, it's just the beginning of the next great chapter. And whether she ends up right or wrong, one thing is undeniable. She has changed the way investors think about risk, innovation, and the future. The market may crash, prices may fall, fear may take over, but innovation doesn't stop. And that's the world Kathy Wood is betting on.